Thanks everyone, thanks for your time today to introduce the opportunity. Austral Resources, Australian pure play copper company located up in the northwest Queensland region. I thought I'd just define the opportunity given we're all investors in the room. So to really look at it and break it down quite simply, we only do copper, we only do it in Australia. So we're not looking to play in the high grades in South America. We're not looking to become a nickel, lead or zinc or mixed metals business. We only just want to do copper. So do two things, do them very well. Our unique selling proposition is that we are the only company that can process copper oxides and copper sulphides. So for those that know the industry, typically you choose one or the other. Most of the producers that are in this country do a copper sulphide. So we have the only operating SX-EW and heap leach facility in the country at the moment, and that's called Mount Kelly, about 120 k's north of Mount Isa. We are production focused. So today we make 10,000 tonnes of copper cathode sheet. That's a finished product on site. It's sold to Glencore, trucked down to Townsville, and then exported directly out to Asia. Alongside that production, we have a second facility, which we'll touch on shortly, called Rocklands. It's the old Wayne McRae Cadeco concentrator, for those in the room that are old enough to remember that. We are bringing it back into production in the middle of next year, so Q3 2027, and I'll touch on the reasons why that facility broke all those years ago. Secondly, exploration-wise, we have over 2,000 square kilometres of tenure. For those that have tracked the company, we currently have in a proposal to acquire Hammer Metals as well, and they have 3,000 square kilometres. So that's a total land holding of 5,000 square kilometres in a province that's fairly rich in copper prospectivity. We have a dual track strategy for organic and inorganic growth. On the organic side, obviously driven around resource development and exploration. On the inorganic, we have a stated objective to get ourselves into the ASX 300 index. So we're not here to slog it out for the next 10 years, inching it away. We are here to make a significant presence and dent into the market. And if you look at it from a competitive set, you've got Sandfire as a pure play copper company, and then you've got very little in between. You've got guys that play in mixed metals, you've got guys that play overseas, but as an Australian pure play copper company, there is no competition. In terms of our infrastructure, we have over $1 billion today in replacement value that is locked in two facilities. The operating SX-EW has been in production since 2007 when it was owned by Copperco, and that has a nameplate capacity of 30,000 tonnes per annum that we can plate. We are going to optimise that to 25,000 tonnes per annum. So anyone who has a manufacturing sort of facility will know if you run machines at their full rate all the time, then eventually they'll break. So we've allowed ourselves in our optimisations to run it at 25 versus 30. Down at Rocklands, it has a nameplate capacity of 3 million tonnes per annum. Recently, the Queensland government gave us another $15 million to look at increasing that capacity from 3 to somewhere between 4.5 to 6 million tonnes per annum. And at 6 million tonnes, to give you an idea of how big a facility that is the same size as what Glencore operates in Mount Isa today. So it isn't really a small facility. We're talking about regionally significant infrastructure that enables us to essentially look at acquiring a whole range of feedstock out of that region that is backed up by hard assets. And really what we're looking at doing is leveraging those assets by having a strategy that looks at toll treating. So for those that know and follow the producers that are up in that region, like Evolution and AIC, they only process for themselves. So we are going to open up our facility to accept third-party toll processing. We do that with Glencore. So Glencore go and procure those customers for us. They come to us with a schedule and say, we need X amount of capacity for this period of time, and we schedule them in so that we make sure that our mill is always full. What does that mean? That means we make production margins every day. That production margin is what drives our exploration and resource development, so that we're not coming back to shareholders every 12 to 18 months and asking for more money, right? We become a self-sustaining business. And that's a key difference, I guess, around what we've looked at in terms of a revitalised strategy. We were in suspension off the ASX for 2 years up until November of 25. At that point in time, acquired a couple of assets, raised enough money, and in the last 9 months, we've raised $120 million. Today, we still have $73 million of cash at bank at 30 June, and we're fully funded to bring the Rocklands asset back online in Q3 of 27. We've recomposed the board. We've brought in some industry stalwarts, if you like, guys like David Quinn-Liven, for those who followed things like Genesis and Volt and Norabanda of the past, and a guy called Neil Meadows, who's a 40-year metallurgist. He's a professional company director with Glencore, and then Sean Westbrook, who's a professional geologist around the world. Alongside that, as I say, we have a stated objective to look at consolidating the region. We've made 4 acquisitions since November. So we're not here to sit around and sort of twiddle our thumbs. We are getting on with it. And I'll take you through some of those acquisitions later. For those that want to follow along at home, research is covered by Bells, Shaw's, MST, and small caps. So to define the strategy, it's always easy to use a picture. And this is the typical slide that we look at. So we call it the East-West strategy. On the western side is Mount Kelly. That's our processing SXEW operation. At the moment, we're mining out the Lady Annie cutback, which was recently acquired from Glencore. And really, we've got feedstock that is everything in those orange boxes on that western side. That's roughly around 10 years' worth of dirt in simple mathematics. We make a copper cathode sheet on site. It's a finished product. So for those who understand how copper cathode is made, essentially copper oxide ore is crushed, it's stacked onto a big pile, it's irrigated with a sulfuric solution. That solution is then electrowined or electroplated onto an anode, and it comes off as a copper cathode sheet. They're bundled up into 2.5 tonne bundles and basically backloaded on a truck down to Townsville. They don't need any further refinement or processing. That is a finished product on site. On the eastern side, and really the eastern side is where the opportunity for the company sort of sits. We look at the west as our foundation asset. On the eastern side, this is the concentrator, as I said. It processes a copper sulphide. There's a couple of things here. So we have 6 years of our own dirt to feed through this facility up front. So we don't need any third parties. Then we look at it and we say, okay, we can have toll treating agreements with guys like Maronan, who are in the bottom right-hand corner, and then other guys like Meadowbank, and they're going to bring their dirt to us as well. So then we start to elongate the production profile. Then we have Glencore, who's got tolling agreements with probably 85% of the copper in this region, who then come to us and say, can you look at processing this all through there as well? And so we pick up a margin off that. But the one thing that no one else can do that we can is we can actually backload different ore sources across the region. So things like copper oxides that sit as mineralised waste down out of Cloncurry can be loaded and taken up to Mount Kelly to be put on the heap leach. Likewise, sulphide material that would otherwise be left in the ground can now be extracted and transported down to Rocklands for processing. So when you think about mining and you think about for every BCM that comes out of the ground, the company that can give you the biggest bang for buck is us, because we do both an oxide and a sulphide. You don't leave any of the material behind. In terms of the two facilities, to give you some orientation around it, the picture on the bottom left-hand corner is essentially the cell house. There's 2 wings to it, the left and the right. In the background is the heap leach itself. To give you an idea, there's like 10 million tonnes of dirt sitting on a couple of football fields long and stacked, a couple of 100 metres high. Essentially, the pregnant leach solution falls into those intermediate ponds in the mid-ground, and then there's a couple of rectiformers and cell houses in the middle. And really what happens is that copper solution, as I say, just gets electric current pumped through it, and the copper grows onto an anode plate. It's in the bottom of the cell house. You can see there's a couple of piles of copper that are stacked there, ready to be picked up and transported out. This asset, as I say, has been running for 20 years. It's a well-known asset. We know how it works. Our management team here have all worked together for the last 7 years. Everything on the right-hand side, which is our production feedstock, is fully permitted, ready to go. So they sit on existing MLs. We could basically turn them on tomorrow. All we'd need to do is mobilise a mining fleet. If we come down to Rocklands, as I say, for those that are in the room and know it, this is the same Rocklands that Wayne built a long time ago with a lot of other people's money. Totally, there's over $630 million that's been spent on this facility. We bought it for 25. So even if we did nothing else but break it up and sell it off, we're going to be in front. But really what the issue was at this facility was the crushing circuit. And the crushing circuit is sort of towards the middle of the picture. And really it's no harder than if you put the wrong material in, you'll get the wrong material out. It is pretty straightforward. So they had the wrong type of ore going in at the wrong grade, at the wrong throughput. So we are going to rebuild the crushing circuit. We're going to spend about $10.6 million. We raised that in our second capital raising back in February. We bought a mill off Harmony out of Cobar, so it's the old CSA mill, and it is currently being trucked up to site this quarter. That is the largest procurement risk item that we had in getting the crushing circuit back up and going and in getting the whole facility going. You might be able to see, if you look very closely, that in the middle of the photo in the foreground, there are essentially two blue round float tanks, and there's one on the right-hand side that's black. That's because that's the only one that's been used. So if you think about it and you break it down, 3 million tonnes, there's only one float circuit that's actually been used. The rest of it's all brand new. So everything downstream from the ball mill is all brand new. It's barely been touched, right? So really what this is about is we have our own feedstock. We've got Glencore working with us on a tolling agreement to increase that capacity. We've got the Queensland government who's just given us another 15 million to look at increasing the power to this, to cater for the increased capacity, and then to look at putting in a second crushing line. That expands this facility out pretty quickly and pretty rapidly. There isn't really anything else to change here. There's a couple of ROM orientations and the like, but otherwise this facility is set and ready to go. From a corporate point of view, just to touch on it, current market cap around 180. As I say, 70 million worth of cash at bank, unrestricted. We've got another 67 million worth of term deposits that back our rehabilitation bonding. So in simple terms, you've got 130 million worth of cash to play with and no debt. So the company went into suspension back in September 23. It was in receivership of May of 24. That's when I came in and reset the strategy, made some acquisitions, raised the extra money, and today we find ourselves with no debt. So a junior resource company with no debt, as some of the presenters have said earlier, is always an enviable position to find yourself in. In terms of the board, really essentially the six of us bring unique skills. We don't tend to cross over. So from my point of view, I don't really do much, but Dan does all the logistics and civils. Michael is a lawyer, David's a mining engineer, Neil is a metallurgist, and Sean is a geo. So again, you look at it and you say what you want from a board is a very balanced board. Yeah, everyone brings a core skill set and a specialist expertise. In terms of acquisitions and catalysts, as I say, we've got a stated objective to grow the company and to consolidate the region. We're not going to sort of inch it by year after year. So in terms of acquisitions, we bought basically some ore back from Glencore and Secova early in the quarter. That was called the Anthill Project. The Rocklands Facility, as I said, we bought for 25 million back in October of 25. Lady Loretta was an acquisition of Glencore. It was an adjoining depleted zinc mine that is highly prospective for copper. We also picked up the mining camp and all of their mobile plant, so you can probably imagine that's worth a few bucks. And then more recently, we've got a proposal in to acquire Hammer Metals. So for those of you who are shareholders in Hammer Metals, we look at Hammer Metals and say that's a very important feedstock for us. It's around 39 million tonnes of feedstock. Austral today has 65 of its own. So all of a sudden we end up with around sort of 100, 110 worth of feedstock. That's 50 million tonnes for each facility. And if you work out the maths, that's sort of 10 years plus in terms of production. Other than that, we'll look at some other acquisitions up in the region. It's certainly been competitive. We've got, obviously, Evolution has bought Carnaby recently. We've had the Loyal Minerals takeover as well. And there's a few other ones sort of running in the pipe. So it's certainly an exciting time to be in copper and up in northwest Queensland. In terms of catalysts, just quickly, completion of obviously mining at Anthill. We've got the two mining campaigns at the moment, which are Mount Clark Flying Horse, it's the saddle load, and the cutback. We've been drilling. We run two drill teams, one on the east, one on the west. So they've been busy. They're fully funded for the next 18 months. And then, as I say, we continue to look at M&A. So if anyone wants to go through the story and the opportunity, it is quite exciting. It has been certainly a reconstruction, a sort of a bit of a Lazarus kind of moment, but it's very exciting. So thank you.